Oil at $100 a barrel. Panic, catastrophe, or a golden opportunity for someone? At the start of this year, oil was trading comfortably at $65 a barrel. That was the price everyone planned around. Governments set their budgets, companies made forecasts, investors slept soundly. Then, almost overnight, everything changed. Just 3 weeks into the conflict in the Middle East, oil spiked to $100. Some analysts are now whispering about $200 a barrel. The markets are on a roller coaster so wild that even the experts have stopped making predictions. Prices lurch up and down, and nobody knows where the ceiling or the floor really is. Every headline screams about soaring oil costs, but here's what most news reports won't tell you. Behind the chaos and panic, a much deeper game is underway. The real story isn't just about prices climbing. It's about power. Who's gaining it, who's losing it, and who's quietly taking control as the world scrambles to adapt. Right now, while some countries panic and others hold their breath, there's one player thriving in this turbulence, not by chance, but by design: Russia. As energy flows are thrown into disarray, Russia is leveraging its strategy, not luck, to turn chaos into long-term advantage. While the world's attention is glued to price charts and dramatic headlines, Russia is quietly cementing its role as a stable, indispensable energy supplier, especially with Europe desperate for cheaper alternatives. Think about it. Oil jumping from $65 to $100 in a matter of weeks. That's a 50% surge shaking the entire economic order. Some say it's a blip. Others warn it's just the beginning. But the truth is far more complex, and the consequences could reshape global power for years. If you want to understand what's really happening in the energy markets, not just the panic, but the strategy and the stakes, keep watching. Because this oil crisis isn't just another headline, it's a turning point. Let's look past the surface and break down why this oil shock is unlike anything we've seen before, and who truly stands to gain. What exactly happened in the Strait of Hormuz that sent shockwaves across the globe? To understand why oil prices are spinning out of control and why Russia is emerging stronger than ever, we need to zoom in on a single, narrow stretch of water that suddenly holds the fate of the world economy in its grip. Picture this. The Strait of Hormuz is a tiny bottleneck, just 54 kilometers at its narrowest, squeezed between Iran and Oman. But it's no ordinary waterway. This is the vital artery for a third of all the oil shipped by sea. Every third oil tanker on the planet passes through here. And in the aftermath of a sharp escalation between the US, Israel, and Iran, Tehran now holds the keys to this chokepoint. Here's how the world changed overnight. When US-Israeli pressure on Iran reached a boiling point, Iran didn't just threaten by force, it wielded the strait as an economic weapon. Instead of launching missiles, Tehran started charging a staggering $2 million per tanker to pass through Hormuz. Imagine, every single ship, every day, forced to pay a fee no one had even dreamed of before. The economics of the entire global oil market flipped in an instant. This isn't a blockade in the traditional sense, it's a cash register operating right at the world's jugular. Now, Europe, already desperate for cheaper energy, is scrambling to find new routes and sources. The unpredictability keeps everyone on edge, from oil companies to everyday drivers at the pump. The market has priced in both the fear of escalation and the faint hope of negotiations. Oil, which was $65 a barrel at the start of the year, now hovers around $100. Not because that's fair value, but because no one knows what's next. And here's the twist. Russia isn't just riding out the storm. It's playing the game with a clear plan. While chaos reigns, Moscow's deliberate moves, diversifying markets, redirecting exports, and even cutting off Europe, have left it uniquely prepared for every scenario. This isn't luck. This is strategy. As experts point out, in every possible outcome, Russia stands to come out ahead, whether prices skyrocket, stabilize, or swing wildly. The stakes couldn't be higher. If we want to understand who will control the flow of energy and wealth for years to come, we have to grasp the mechanics of this disruption. It's not just about today's headlines or tomorrow's gas prices. This is about the balance of power, the security of economies, and the future of entire regions. So, with the Hormuz crisis rewriting the rules, let's break down the three possible scenarios that will shape our energy future. Three futures, one constant. Russia stays strong, no matter which path the world takes. Let's break down what's really at stake by looking at the three big scenarios for the global oil market, because, surprisingly, Russia comes out ahead every single time. First, imagine the worst-case scenario: escalation. The Middle East crisis spirals. Shipping lanes like the Hormuz Strait are cut off. Global supply chains break down. Oil prices don't just spike, they explode, potentially soaring to $200 a barrel. For most countries, this is chaos. But for Russia, it's a windfall. The Russian treasury overflows, pouring in revenues that would have been unthinkable back when oil hovered around $65. With that kind of cash, Moscow can fund domestic priorities and global ambitions that were once just pipe dreams. The higher the chaos, the higher the price, the greater Russia's leverage. Now let's flip the script. What if peace breaks out? The parties in the Middle East come to the table, the major straits reopen, tensions ease. Oil stabilizes, let's say around $80 to $90 a barrel. At first glance, you'd think this is a setback for Russia, a step back from those record highs. But here's the catch. Earlier this year, prices were $20 to $25 lower. As energy analyst Andrei Loboda puts it, $80 to $90 a barrel isn't just tolerable for Russia, it's comfortable. This is still a price level that fills the Russian budget with room to spare. The days of $65 oil? Gone. Even in peacetime, Russia is sitting pretty. But what if the world can't make up its mind? Our third scenario: prolonged volatility. Maybe the conflict smolders, then flares up again. Oil prices whipsaw between $80 and $200 a barrel. Contracts collapse, shipping and logistics are a mess, and it's nearly impossible for anyone to plan long-term. This, as China's government bluntly called it, is the worst-case scenario for Moscow. Turbulence makes strategy tough, and sudden $50 swings in a single week aren't anyone's idea of stability. But even here, there's a twist. The floor doesn't fall out from under Russia. $80 is now the new normal, still $15 to $20 higher than where we started the year. In every scenario, Russia is operating in a profit zone that was unthinkable just months ago. Here's the key insight. Even if tensions ease, oil isn't likely to drop back to $65. That's not the ceiling anymore, it's the new floor. The world has changed, and the market's new reality has shifted right along with it. As Bloomberg put it, Russia is now viewed as a stable, reliable supplier, a premium asset in a world rocked by uncertainty. And when half the globe is in turmoil, that stability becomes more valuable than oil itself. So why does this matter for you? Because understanding these scenarios gives you a critical edge. If you know the range of possible futures and see that Russia is positioned to win in all of them, you're ahead of the curve. You can anticipate where markets and policymakers are heading. Maybe it means adjusting investments, rethinking risk, or just seeing the bigger picture behind all the headlines. But here's the thing. Russia isn't just getting lucky or waiting to see where the chips fall. It's acting, systematically, strategically, and with a long-term vision. While others panic or speculate, Russia is opening new markets and quietly rewriting the rules of the energy game. Let's look at how they're doing it right now. Why, with oil prices sky high and buyers waving cash, is Russia refusing to sell its oil to Europe? On the surface, it sounds bizarre, even reckless. But dig deeper, and you'll find a strategy as sharp as it is ruthless, one that's rewriting the rules of the global energy game in real time. Let's start with a move that barely made a ripple in Western headlines. Russia's first oil shipment to the Philippines in 5 years. 750,000 barrels of ESPO crude, premium oil, already delivered and paid for. This isn't a one-off desperate sale. It's proof of a growing pivot. Russia isn't scrambling for buyers anymore. In the 1990s, it was the other way around. Anyone with cash set the terms, and Russia had to say yes. Now, it's buyers who are lining up, looking for deals, and Russia is in the driver's seat. But there's more to this story than just finding new customers. The bigger play is happening behind the scenes, in the currency Russia demands for its oil. For decades, nearly all global oil deals cleared in US dollars. That arrangement gave the West enormous leverage and wove the dollar into the fabric of world finance. But Russia's new contracts with India, one of its largest and most reliable buyers, are being struck in rubles or yuan, not dollars. Every one of these de-dollarized deals is like pulling a brick out of the wall that holds up the old financial architecture of oil. It's slow, but each non-dollar shipment makes it easier for others to follow, and harder for Washington or Brussels to pull economic levers. This isn't theory. It's not wishful thinking. It's happening right now. Asian markets are opening up, and Russia is seizing its moment, not by flooding them with cheap oil, but by picking and choosing who gets access. And that brings us back to the heart of Russia's boldest, most controversial decision: cutting off Western and Central Europe, not just for today, but for good. You might think this makes zero sense. Oil is trading at $100 a barrel. Demand is off the charts. Why not sell to anyone who can pay? That's conventional wisdom, and it's exactly what Russia is turning on its head. The logic is cold, calculated, and designed for the long haul. Here's how the trap works. For years, Europe chased energy independence from Russia, building LNG terminals, locking in long-term contracts with the Middle East and North Africa, and loudly imposing sanctions. But these alternatives come with a catch. Much of the oil and gas now flows through the Strait of Hormuz, a choke point that's suddenly so risky, every tanker pays up to $2 million just to pass. Europe swapped one dependency for another and landed in a far more volatile neighborhood. Now, Russia's move to permanently shut Europe out, even through third parties, might sound like stubborn pride. But it's not about revenge or making a point. It's about leverage. As long as Russian oil is off limits, Europe has no easy outs. Giving Brussels backdoor access would ease the pressure, let European leaders keep up appearances, and push real decisions down the road. Slam that door shut, though, and the pressure becomes unbearable, forcing Europe to make painful choices now, not in 5 or 10 years. In other words, sacrificing short-term profits from European sales is the price Russia is willing to pay for something bigger: long-term geopolitical power, control over who gets energy, and who has to sweat through shortages and high prices. It's a bet that the ability to dictate who has access and who doesn't is worth far more than today's windfall profits. So, what does all this mean for the future? To see the full impact, we need to layer everything together, from the panic on trading floors to million-dollar tolls at Hormuz, to the rise of non-dollar oil trades, to the deliberate freezing out of Europe. Let's pull back and see how Russia's multi-move plan is reshaping the entire world energy order. The oil market chessboard: why strategy, not luck, wins the power game. Let's step back and look at what's really happening here. The chaos and panic over oil prices are grabbing headlines, but beneath the surface, it's not about who gets lucky with a sudden price dip or manages to dodge the worst supply shock. It's about who's thinking 5 moves ahead, who's got a real plan. Let's take Russia. This isn't just a country riding a wave of unexpected fortune. It's executing a multi-step strategy in real time. That much hyped pivot to Asia? It's not a slogan anymore. We're talking real cargoes. 750,000 barrels of premium oil shipped to the Philippines in a single deal, and that's just a start. Look at how Russia is pushing de-dollarization. Again, not just headlines, but actual deliveries and new contracts being settled outside the dollar system. India's refineries are now processing Russian oil with payments in local currencies. These aren't trial balloons. They're real shifts in the plumbing of world energy. And here's what's wild. Russia's reliability as a supplier is suddenly its biggest asset. Why? Because every other major route, especially in and out of the Middle East, is now hostage to instability. The Strait of Hormuz, once just a key shipping lane, has turned into a toll road where every tanker pays a fortune just to pass through. In this environment, Russia's land routes and growing Asian partnerships look like gold. Meanwhile, Europe. It spent 4 years, and a fortune, trying to build an energy fortress to break free from Russian oil. LNG terminals, contracts with alternative suppliers, bold speeches about never going back. But when the Middle East crisis hit, the alternatives ran through the same unstable choke points. Now, a big chunk of Europe's new supply comes with a built-in risk premium: higher prices, more uncertainty, less control. And here's the kicker. Europe can't just turn around and buy Russian oil directly, even if it wants to. It's boxed itself in with its own sanctions. This isn't about gloating over Europe's predicament. It's about recognizing the difference between playing chess and rolling the dice. Russia planned for disruption, built new partnerships, and kept its options open. Europe set rules for itself and hoped the game would go its way. Today, geography and reliability have become more important than price or market rumors. People with strategy and resources now set the rules. Everyone else is just hoping for the best. The lesson here isn't just for governments or oil traders. It's for anyone who cares about what happens next. In a world where crises can come out of nowhere, it's not enough to react. You have to think ahead. Strategic thinking, whether you're a policymaker, an investor, or just trying to understand your energy bills, makes the difference between weathering the storm and getting swept away by it. So, what does all this mean when oil hits $100 a barrel, and what should you watch for next? Now you know, $100 oil isn't a disaster, it's a new starting line. At the beginning of this video, that number seemed ominous. Oil soaring past $100 a barrel, markets shaking, headlines screaming panic, instability, catastrophe. But take a closer look, and the real story is very different. This isn't a freak crisis that will blow over, sending prices back down and everything back to normal. What we're witnessing is a structural shift, a moment that's locked in a new energy reality. In this new world, the map matters more than the market. Geography, where oil comes from and where it goes, has suddenly become more important than any Wall Street speculation. And in this game, Russia finds itself in a position it could only have dreamed of a few years ago. Resource-rich, connected by overland routes, and backed by a rapidly growing network of Asian partners. While the West scrambles to adapt and Europe mourns the loss of reliable supply, Russia is already moving, building new markets and new rules. Remember, $100 oil isn't just a price tag. Behind it lies the transformed Strait of Hormuz, now essentially a toll gate, $2 million for every tanker that passes through. Every scenario from here, whether Russia cuts off Europe or Europe comes crawling back to negotiate, puts Moscow in a position of strength. The Asian pivot isn't just diplomatic chatter anymore. It's real barrels on real ships, hundreds of thousands of them, heading east every day. Premium Russian oil is landing in places like the Philippines, while Indian refineries are quietly starting to pay in currencies that aren't the dollar, chipping away at the old financial order one shipment at a time. And here's the biggest twist. Russia can now afford to say no to Europe, even when the price is high. Because for the first time, holding the keys to the energy kingdom is worth more than the quick profit from a frantic buyer. The logic has flipped. The power lies with those who can choose their customers, not just those who can pump the fastest. So, what does $100 oil really mean now? It's not a sign of looming catastrophe. It's the baseline for a new era, where the geography of supply trumps the volatility of the market, and where trust and reliability in your suppliers are valued higher than a cheap barrel. The game has changed. Whoever controls the resources, and has the discipline to decide who gets them, now writes the rules. It's not just about oil. It's about who has the leverage to shape economies, forge alliances, and dictate terms. The old model, one choke point, one currency, one set of rules, broke down almost overnight. Those who saw the shift and moved first are now ahead. Those who spent years building energy independence, only to slam the door on their former suppliers, have woken up to find the key is on the other side. Russia didn't just talk about change, they made it happen. New markets are opening, new routes are being carved, new contracts are being signed. All of this isn't distant future. It's happening right now, while much of the world is still stuck in yesterday's playbook. So here's my challenge to you. Are you watching the old prices or the new power? Are you still waiting for things to go back to normal? Or are you ready to adapt to what's next? Because missing this shift doesn't just mean higher costs at the pump, it means missing who sets the terms for years to come. And now, knowing all this, what do you think? Will Russia seize this moment and run with it, or will they let this window of opportunity slide by? Let me know what you think in the comments. There's so much more to unpack, so subscribe if you want to stay ahead of the game.